Everyone is telling you that 2025 is the worst time to invest in real estate. High interest rates, crazy home prices, and economic uncertainty everywhere you look. But here is, they're not telling you. I have been tracking the data, and 2025 might actually be the best year for smart investors to get started. While everyone else is sitting on the sidelines waiting for the perfect moment, there's a massive opportunity window opening up right now. And the next 10 minutes, I am going to show you exactly how to take advantage of it, even if you're starting with zero experience and limited capital. What's up, everyone? If you're new here, I've been investing in the real estate for the past decade, and I have seen markets like this before. The difference is this time I know exactly what to look for. See, most people think real estate investing is about timing the market perfectly, buying at the absolute bottom and selling at the peak. But that's not how real estate wealth is built. Real wealth comes from understanding the market cycles, adapting your strategy, and taking action when others are paralyzed by fear. Today, I'm breaking down my complete 2025 real estate investment blueprint. Five core strategies that are working right now, while everyone else is waiting for things to get better. These aren't theories or outdated tactics from 2025. These are battle tested methods I am using today. And by the end of this video, you will have a clear roadmap to start building your real estate portfolio this year. So let's dive in. Here is the brutal truth that no one wants to talk about. Most people aren't financially ready for real estate investing, and 2025 has made this even more critical. But here is my unique approach. Instead of just telling you to save money and improve your credit, I am going to show you the exact financial foundation formula I use with all my clients. First, the 3-6-20 rule. You need 3 months of expenses saved and a credit score above 600, ideally 720 plus, and enough cash for a 20% down payment, plus closing costs and reserves. But here is the twist: you don't need all of this upfront. I'll call it reverse engineering. Your first deal, start by finding the price range in your target market and then work backwards. If homes are 200K, you need $40,000 for down payment plus about $8,000 for closing costs and reserves. That's $48,000 in total. Sounds impossible? Here is where it gets interesting. Use the income stacking method. Your main job covers your living expenses. Your side hustle, whether it's freelancing, delivery driving, or selling products online, that money goes directly into your real estate fund. I've seen people stack an extra $1 to $2,000 per month this way. At $1,500 monthly, you hit that $48,000 over 2.5 years. But here is the secret sauce. While you're saving, you're also learning and building relationships. This isn't just about accumulating money, it's about becoming an investor before you make your first investment. Forget everything you have heard about real estate teams. Most advice tells you to find an agent first, then a lender, then everyone else. That's backwards for 2025. Here is my PAR team pyramid approach that actually works. Start with a lender, but not just any lender. You want a mortgage broker who specializes in investment properties and understands creative financing. Why? Because they will tell you exactly what you can afford, what programs you qualify for, and most importantly, what you need to improve to qualify for better terms. Next, find your market analyst. This might be a data savvy agent, a local investor, or even a property management company. This person helps you understand which neighborhoods are trending up, which are declining, and where the best cash flow opportunities are. Then comes your deal finder. This could be an agent, a wholesaler, or a property scout. But here is what's the difference in 2025. You want someone who understands that we are in a negotiation market right now, not a bidding war market. Your repair crew comes fourth. A reliable contractor who can give you accurate estimates quickly. In 2025, costs are higher, so having someone who can work efficiently is crucial. Finally, your wealth protection team, an accountant who understands real estate tax benefits, and an insurance agent who can properly protect your investments. Here's the key: build these relationships before you need them. Take these people to coffee, ask about their experiences, and provide value where you can. When you're ready to move, you will have a team that prioritizes your deals. Everyone is asking, where should I invest? And getting the same generic advice. Here's my market intelligence system that's working right now in 2025. First, forget about investing where you live unless it makes complete financial sense. I use the 1% rule with inflation adjustments. Monthly rent should be at least 1.2% of the purchase price in 2025 markets. If a 200K property does not rent for at least $2,400, keep looking. Second, the migration tracking method. I monitor three data points: job growth, population inflow, and infrastructure investment. Cities adding major employers, seeing the population gains, and investing in infrastructure are gold mines. Think about where Amazon is building fulfillment centers, where new hospitals are being built, where universities are expanding. Third, the drive until you qualify strategy. Pick a target city, start from the expensive center, and drive outwards until you find neighborhoods where the numbers work. Fourth, local market timing indicators. I look for markets where inventory is building but hasn't crashed, where days on market are increasing, and where price reductions are becoming common. These are negotiation opportunities. My secret weapon: the future neighborhood analysis. I look for areas that are rough now but have major catalysts coming: new transit lines, city center revitalization projects, or major employer relocations. By the path of progress, not where it's already arrived. Here is where everyone gets it wrong. They think deal finding is about having the best tools or the most money. In 2025, it's about being more persistent and creative than your competition. My deal finding machine has four levels. Level 1 is the MLS, but with a twist. Instead of looking for perfect deals, I look for potential deals. Properties that have been on the market for 60 plus days, price reduction, or properties that need obvious improvements. I make offer on everything that meets my criteria, even if this seems to be too high. Level 2 is the stale listing strategy. When a property expires without selling, the seller is frustrated. I contact them directly 30 to 60 days after expiration with a fair cash offer. Success rate: about 15%, which is huge in this business. Level 3 is the relationship based deal flow. I have built relationship with the wholesalers, but not the way you think. Instead of competing with 50 other investors on their email lists, I provide value first. I help them analyze deals. I refer contractors. I provide market insights. When a great deal comes in, I am the one on the first call they make. Level 4 is the problem solving approach. I look for sellers with a specific problem: divorce, job relocation, inherited properties, financial distress. These aren't distressed properties, they are motivated situations. I position myself as a solution provider, not just another investor trying to lowball them. The key is consistency. I spend 2 hours every morning on the deal finding activities. It's like going to the gym. Consistency beats intensity every single time. Here's the biggest mistake new investors make: they try to do everything: flipping, rentals, wholesaling, BRR, RR method, short term rental. In 2025, specialization is your superpower. For beginners with limited capital, I recommend the modified BRR method. Buy a property that needs cosmetic improvements, renovate it efficiently, rent it out, and refinance to pull out most of your capital. But here is the 2025 modification. Instead of trying to pull out 100% of your equity, be happy with 70 to 80%. This keeps your deals more conservative and reduces risk. For those with more capital but limited time, the turnkey rental strategy works well. Buy properties that are already renovated and rent ready. In markets where property managers are abundant and reliable, your returns might be lower, but your time investment is minimal. For people who want active income, fix and hold with premium positioning is powerful. Buy properties below market value, improve them significantly, and then rent them at premium rates to high quality tenants. Think granite countertops and stainless steel appliances in working class neighborhood. The key is picking one strategy and becoming excellent at it before expanding. I've seen too many investors fail because they spread themselves too thin. Master one approach, create systems around it, then scale or diversify. Here is my decision framework. If you have more money than time, go with turnkey rentals or syndications. If you want the highest returns and can handle the most risk, go with flipping or short term rentals. Look, I know this seems like a lot, but here's the truth. 2025 isn't going to wait for you to feel ready. The investors who start building their foundations now, who start networking now, who start analyzing deals now, they are going to be the ones positioned to win when the market shifts in their favor. I have given you 5 strategies that are working right now. Pick one that resonates with you and start there. Don't try to do everything at once. Focus, execute, and build momentum. If this video helped clarify your real estate investment path for 2025, do me a favor and hit that subscribe button. I am sharing everything I'm learning in real time as I continue building my own property portfolio, and I want to make sure you don't miss any of these insights. Also, drop a comment and let me know which of these 5 strategies you are most excited about to implement. I read every comment and often create follow up videos based on your questions. Remember, the best time to start was 10 years ago. The second best time is right now. I'll see you in the next video, and until then, keep building your wealth through real estate.